Good afternoon, everyone, and welcome to this session of the Kepler Trust Intelligence Growth at an Unreasonable Price event. Shortly, we'll be hearing from Emily Whiting of JPMorgan about JPMorgan Asia Growth and Income, which is a portfolio focused on Asian equities that is currently trading on a 9% discount. Before I hand over to Emily, just a reminder that if you wish to put a question, please put that in the box to the right of your screen, and then we should have 15 minutes or so for questions at the end, and I'll put those to Emily. So with that, I'll hand over to Emily.
Great, thank you, Thomas, and thank you all for joining. I quite like this title, Growth at an Unreasonable Price, because whereas we normally think unreasonable means expensive, I do believe that in this case, from an Asia context, we're really talking to how the valuations of such a big part of the world have opened up in the last couple of years. And despite everything that's going on, a lot of that long-term story hasn't changed. So what I want to do is spend maybe the next half an hour or so and really bring to life a lot of the companies that we're able to find across Asia, how we invest in them, the large team that we use to really hunt out those opportunities, and as a result, why we continue to believe that JAGI is an incredibly compelling investment proposition. So if we could just move on to the next slide, please. Let's just understand, what do we mean by JAGI? So JPMorgan Asia Growth and Income. This is one of many investment trusts and funds we run across our emerging market Asia Pacific franchise at JPMorgan. The strength of our team, to my mind, has always been the people. Emerging markets, and within that, Asia is an inefficient and a very broad asset class. And as a result, it really is about having people on the ground, the ability to go out and kick the tires and find those companies. And we actually have one of the largest teams in the industry. So right now we have nearly 100 dedicated portfolio managers and analysts covering the length and breadth of emerging markets. A lot of them are actually sat in Asia. In particular, the two portfolio managers, Ayaz Ibrahim and Robert Lloyd, who are both based on the ground in Hong Kong. So people are at the heart of what we're trying to do. In terms of what we are trying to do with the portfolio, you'll see this phrase, combining top-down and bottom-up research. What does that actually mean? Well, top-down is when we're looking from very much a bird's eye view, and from our perspective, we're trying to understand which are the countries, which are the markets that we want to be overly exposed to, so overweight, and which are those markets that will maybe look to us from an aggregate level slightly less favorable, and therefore we're going to underweight. The bottom-up research is about then finding the stocks in those markets. And it's really about the people on the ground being very thorough, understanding various factors about the company, the economic side, so the strength of the balance sheet, the duration, so the longevity around the stock, the long-term ability and potential it has to grow market share. And then finally, the governance. And governance is always that concern around Asian equities. To my mind, what we're trying to do in understanding the governance is build up trust with the management of the companies that we want to invest in. When we sit across the table for them, hopefully face to face, but more often than not right now remotely like this, we want to be understanding that they're trying to do the right thing for all minority investors. And in terms of the types of companies that appeal to us most for this trust, it's about finding what we would term core franchises. So companies who, as I said, can continue to grow their footprint over time. They have very much a quality angle. For that, we often look into strength of balance sheet, profitability, and so on. So we're very much looking, as we will see later in the presentation, across Asian markets, but then we will find ourselves with certain themes, certain tilts and biases that really come through. Now, in terms of what we've delivered, that final portion results, very compelling performance over the long term, and that's exactly what we're after. This, to us, is a long-term investment. We will always find that there are environments where this type of product struggles. I think every product clearly has certain market environments they struggle in. But for us, it's about looking long-term, buying, holding, compounding those superior businesses, and being able to deliver alpha and enhance your portfolios. Okay, so let's start to think about what we're trying to invest in. Where are the themes? Where are the opportunities that really lead us into investing? So if we could move on to the next page, please. So what we will see is that there are three key themes that we're looking into. Lifestyle upgrades, demographic changes, and financial deepening. So this is on slide 3. If we could move on, please, Thomas. What we're not doing is using that as our start point. So what we're not saying are these are the themes, let's just find the companies that fit into those buckets. But when we take a step back from the portfolio and clearly understand the stocks that to us are the most appealing, we find that these are the three broadest themes that continue to shine through. So that's why I thought it would be quite useful to almost align some of our thoughts from this angle. Because I always think if we can bring to life the types of companies we can invest in, if we can make it a bit more tangible, it helps people with confidence. And Asian and emerging market equities is very much about confidence and very much about sentiment. So these three areas I just want to drill into a bit more. And as you can probably tell, they're quite long-standing. This hasn't shifted based on US-China trade tensions. It hasn't shifted based on commodity prices rallying. It hasn't shifted based off geopolitical risks. This is very much about long-term opportunities in a region that's home to over 60% of the world's population. So let me go through lifestyle upgrades. So if we could move forward one slide, please. And again, what I've tried to do is tease out a couple of different areas that, to me, really articulate and highlight where we're seeing that opportunity. So on slide 4, I've got a couple of examples here around what we would term lifestyle upgrades. So think of this as people having more money. They therefore can demand greater choice, and they've got greater ability to think about where they're spending that money. So this first area, staples, consumer staples, this to me is almost that age-old story about people earning more money and choosing to uplift in what they buy in different areas. Think of it very simply, even from our own lives, of you go to a supermarket and rather than buying own brand, you buy a named brand. It's exactly the same the world over. And what that chart on the left shows is what we term the per capita consumption of different types of products. And this is very much India. And the reason I've chosen India is I think it gives you the longest runway for growth. It is clearly one of the most populated markets in the world, nearly 1.5 billion people living there, but is still fairly early on in its development cycle, in the rise of GDP and disposable income. And what you can see on this chart is the blue bar is showing you the per capita consumption, so what a typical individual in India consumes of all those different areas, and the yellow dot shows you the global average. And so you can see in areas such as, I don't know, biscuits, you can see halfway along there, deodorant, shampoo, toothpaste. I mean, toothpaste is always a really good story in India. The average person brushes their teeth once a day. Clearly across the Western world, it's probably closer to 2, if not 3 times. So you can see the growth potential just for something that's as basic as toothpaste. And within that, if I think about some of the companies that we can find, and actually companies that we hold, Hindustan Unilever, fantastic story. Hindustan Unilever is a company in India that's over 100 years old. The Unilever brand is clearly global. We've all heard of Unilever. And what Hindustan Unilever have done so incredibly well is they've almost built out this product pyramid where as you start to have more money and you want to uplift the quality of what you're consuming and what you're buying, they're keeping you within their ecosystem. So you've maybe gone from buying own brand tea bags, you aspire to get to their top level, which is yellow label, Lipton yellow label tea. Similarly with deodorant, Hindustan Unilever own Dove as one of their brands. In cleaning products, they own Cif and so on. And what they basically do is on each of those levels of products, they advertise the next level. So you almost aspire to stay within their ecosystem and keep buying the higher and higher level products. It's estimated that 9 out of 10 Indian households regularly use at least one product made by Hindustan Unilever. So really broad coverage across clearly a very big market, and people that as they earn more will naturally uplift. The other company that we name here, Britannia, great story again. It's about biscuits and snacks. It's that simple. So this is a great biscuit and snack manufacturer, as well as everyday biscuits. Now that people's tastes are maybe demanding more, they're starting to make croissants and brioches that go into individual packages, snack bars, and so on. So on the face of it, really simple companies, but part of that's great, right? Because the everyday person in India buying tea bags, buying biscuits, what they're doing isn't impacted by the broader headlines that we all read, the headlines that in many cases are nervous, give us negative news flow and so on. So that's staples and the premiumization story that I don't think has changed and probably won't change going forwards. One of the other lifestyle upgrades that we can point to are electric vehicles. And I think, again, it's a story that's incredibly well known. We all know about the increased usage and penetration of electric vehicles across the world. But China is a great market for us by way of not just exposure to electric vehicles, but the companies that manufacture a lot of the components that go into them. So electric vehicles in China, in Shanghai in particular, are of a higher penetration level than California. And so China's already pretty advanced with electric vehicles. But where we find some great opportunities, as you can see one of the names underneath that middle chart, Contemporary AmpereX Technology, a company known to us as CATL. They are one of the largest battery component manufacturers for electric vehicles in the world. They have, they're tied in with a lot of the big companies, including Tesla and Kia and Hyundai and so on. Another great company that we haven't listed here is a glass company called Fuyao Glass, F-U-Y-A-O. On some of your vehicles, the windows may well have the little stamp that says Fuyao Glass. Why we like them and why they're doing so well? The typical electric vehicle has double the amount of glass from a normal car. You will have undoubtedly seen over recent years how many cars now have these panoramic sunroofs and pretty much all glass as their roofs. And so that, again, is another type of company that allows us to play that theme. And then finally, for this page, you can see on the right-hand side, these tech leaders. And what that chart is showing you is the amount of information created and what we need to do with that. I mean, I don't know about you, my inbox is constantly spilling over. I get more and more junk emails that I swear I unsubscribe to, and still this information flow keeps coming and keeps coming. With all of that information flow, the technology needs to continue to evolve. And so we have great companies within the Asian region, some of which you may have heard of, some of which you won't have heard of, but I actually guarantee you have in your homes right now. So TSMC, Taiwan Semiconductor Manufacturing Company, this is the biggest and probably one of the best known semiconductor companies globally. They are continuing to evolve and lead the industry into smaller, more efficient, faster semiconductors. And I mean, semiconductors permeate every aspect of our lives. Not just your cars, but your toaster, your iron, your sports watch, your phone, your laptop, and so on. And so TSMC are very much at the cutting edge there. Samsung Electronics, not only are they involved in semiconductors, they're also very big in the memory space. And nowadays, it's quite scary when you think about the fact that the average mobile phone has more memory than when computers used to take up entire rooms, and again, continues to get smaller and faster. And then the only other company I just want to highlight on here is a company called Realtek. So they are involved in semiconductors that go into Bluetooth headphones. So if any of you are joining this webcast with a pair of Bluetooth headphones on, I pretty much guarantee that Realtek have made a component that goes into them. So these are the types of companies that we find that are very much tied to that lifestyle upgrades, people earning more money, taking better choice and demanding greater quality over what they're doing. Another area that to me is a really great long-term structural theme, just over on page 5, please, is what we term financial deepening. And again, at the heart of this theme, it's tied in that as people earn more money, they can demand better choice, but they can also look after their lives and provide for their futures in a far greater way than they were ever able to before. Insurance has always been a really strong long-term structural theme, especially within Asia. And what you find on this chart is it's plotting various markets across the world and what we would term their insurance penetration theme. And what you tend to find is there's a very simple, straightforward correlation that as people have more money, they are keen to protect their lives and their health and their families and so on to a greater degree. And as we all know with insurance, once you take out insurance, you've rarely let it lapse. And so as that curve continues to pick up, and we're still some way off in certain markets, you can see down in that left-hand corner, the likes of India and Indonesia have barely got started on the insurance theme. We find some great companies. AIA is a very high quality Pan-Asian insurance company. HDFC Life is the insurance arm of HDFC, one of our favorite companies, our favorite banks in India. And then Prudential, a name that will be familiar to many of you, that recently spun off its Asian arm into a separate business. So insurance gives us great long-term opportunity. And again, it's something that will continue to play out of this secular theme. Another great area to really illustrate the financial deepening is banking. And again, banking, I think, is a fairly tangible story that you go from maybe living in cash and almost living pay packet to pay packet into being able to take out loans, using credit cards, nowadays using mobile wallets, taking out a mortgage and so on. But what we like best are banks and companies within the financial space who have embraced technology to make it easier. So if you think about how you bank nowadays, it's probably very different from how you banked 5, 10 years ago. We probably all receive and therefore cash far fewer checks. And if you do have a check, you maybe have the ability to take a photo of it on your app and you don't even have to go into a bank. You also find that taking out loans, maybe not yet mortgages in the UK, but loans in particular have become far quicker. There's far greater join up around data, around know your customer and so on. So what we find with some of the companies that we're holding and that we like is that technology and innovation has really helped drive their proposition. And once again, it's about getting these consumers into their ecosystem and then what we term cross-selling. So I maybe have a bank account somewhere. They see that I maybe have a slight build-up of money each month. So they start to say, look, would you like a savings account? Or would you like to invest in the stock market and sort of a fund investment? China Merchants Bank is one of the largest retail banks in China. It uses a lot by way of what we term big data and artificial intelligence to try and direct their customers into other financial products that might be of interest to them. HDFC Bank in India has been very much leading the way from an Indian banking perspective by way of its use of technology, to the extent that nowadays you can even get a loan and take money out of an ATM with your thumbprint. So they really enhanced the use of technology to make it easy for people to bank with them. And then Bank Central Asia is an Indonesian bank. And what they've done so well is that Indonesia as a market, fantastic opportunity, but when you think about it geographically, it's very broadly spread. And therefore, they've always been very good with the logistics back in the days when it was various branches to make sure they had good coverage and getting people into banking with them. And typically, as we see across a lot of the world, once you start banking with someone, it sometimes feels like an effort to leave. And therefore, once again, they've got you in their ecosystem. So great growth from a banking standpoint. And then the final example from financials is what we term financial services. And this again is almost the outcome of the success and the growth of these markets. So Hong Kong Exchange is the main stock exchange listed in Hong Kong. And part of where they've been benefiting so much in the last few years in particular is a lot of the money flowing into China will go through Hong Kong Exchange. So Hong Kong Exchange have seen far more Chinese companies list on them, but they're also benefiting from more foreign investment and more foreign investors putting money into China that's maybe going through Hong Kong. So they're a natural beneficiary of the growth of investment and demand into these markets. And actually, that's a story that we see across emerging markets as well. So it's not just Hong Kong Exchange, but more broadly, it's always been a really good story when you find good stock exchanges. They're clearly well regulated, they're asset light, they're cash flow generative, and they're very well positioned to benefit almost as the second order impact of money coming through. So hopefully that's given you a bit of a flavour around the types of stocks, where we see opportunity, and almost overarching all of it, you've hopefully seen that these aren't trying to be tactical. We're not trying to take a short-term view on Asia. We're looking for these long-term themes that will just grow gradually over time and just keep growing and growing and growing. And as a result, if you can find the right companies, we can really help our clients benefit from that growth. So we've gone through quite a few names. How do we actually do it? It's a huge investment universe out there. It's very diverse, multiple different languages, multiple different cultures. People, as I mentioned at the start, are very much at the heart of what we're trying to do. So if we could move on to the next slide, slide 6, please. You will see an awful lot of faces and names. This is our research team. So this, is, to my mind, is the bread and butter of our team. So what do I want you to take away from this? Well, not just the fact we have a big team, but in many cases, when you look at their names and their pictures, you will see that they are native to the markets that they cover. The team in aggregate speak 21 different languages. That's hugely powerful when we go out and we do 3,000-4,000 company meetings a year, to be able to do it in mother tongue, to not be relying on translators, to not make an assumption that then comes back and bites you. The other point I would stress is how experienced these individuals are. So you will see under each of their names, there's 2 numbers. The first number is years in industry, and the second number is years working at JPMorgan. We have a really stable long-term team, but it's a team that we've continued to grow, especially from a China context. So you will see that there are a number of individuals with only 1 or 2, 3 years of experience at JPMorgan. They are new positions. Over the last couple of years, we've invested very heavily in growing out our China research capability. We now have 5 people on the ground in Shanghai as well, which clearly through COVID and the limited travel has been hugely powerful for us to still be able to go out and meet management and understand what's going on with companies. And what these individuals do is provide views on a company. They don't offer a buy or sell recommendation, but in fact what they're actually doing is giving both a qualitative view, so a view around the quality of the business. Think of it very simply as, is this the type of business that we want to own? And then they also give a valuation view, i.e. how much return do we think that company can deliver on an annualized basis for the next 5 years? That 5-year point is also important because it echoes the point I made earlier about being long-term. We firmly believe that investing in Asian equities should be for the long term. You need to have a time horizon in years rather than months. We've seen only in the last couple of years quite how volatile and quite how uncertain these markets can be. If you have a long time horizon and can be patient, it allows you to sit and compound and not panic about what's happening with various daily headlines. So these people are helping Ayaz and Robert, who run this fund, make the decision around the types of companies, where we see the quality and the level of valuation that we want to be buying. Okay, so where does the fund end up right now? What does it look like? So if we could move forward 1 page, please. As I mentioned at the start, We think of this product as very much bottom-up driven. So it's about being stock specific, but we take a view on different markets. That was what we termed the top-down view, the asset allocation. What we're not making explicit decisions on, though, are the sectors. The sectors are very much what I would term the fallout of where we find the good stocks. And as a result, when you look at the sectors, and you can see here what we're showing is the bars show the overweight or underweight to the index, which is MSCI Asia ex Japan. And then the number along the bottom gives you the absolute exposure. So consumer discretionary, we hold 19.5% in absolute terms, and that amounts to a 4.1% overweight. What you will see from those sectors is where we have what we term these natural biases or tilts. And they're very much tilted towards the long-term consumer theme. So you can see that we're overweight in consumer discretionary, in financials. You can see in particular, insurance is an active overweight. And I've broken down actually the subsectors of financials to really highlight the fact that financials are more than just banks. We see an overweight in industrials, and that contains a number of companies that are involved in the electric vehicle cycle. And then also in information technology. And within information technology, that's a combination of both what I would term hardware and software. So hardware being things such as semiconductors, and their software being areas such as gaming or cloud and so on. Now, in contrast, when you look towards the right-hand side of that chart, you can see we have nothing in utilities. Utilities as a sector has become, in many cases, very much government controlled. Utilities companies don't really make profits. They're therefore not sharing profits. They've become far more of a state-owned beast, even if it doesn't suggest they are on paper. And as a result, we just don't find those types of growth opportunity. Consumer staples. So I touched on how great companies such as Hindustan Unilever are, and they really are. But what we have to be very careful of is we will often find that the valuations on consumer staples companies are really quite expensive. And for this product, we want to be fairly core. We don't want to be leaning too much into growth and therefore being too expensive. So with consumer staples, it's almost the reverse of utilities. We are saying these are good companies, but just that we can't justify paying the level that they're asking when we see far better opportunities at a far better valuation elsewhere. And then the likes of materials, energy, you can see we're underweight there. The problem that we always have is with both those sectors, and this is actually quite consistent across the vast majority of our JPMorgan investment trusts, is the sectors are far more led by just the raw material price. The impact of management on those companies doesn't really move the dial versus other sectors and other industries. And as a result, if you're buying into energy and materials, you're taking a view on a raw material price. And we would argue our specialism is understanding Asian corporates and managements rather than trying to speculate on a raw material price. So hopefully that gives you a good flavour of where we do find good opportunities by sector, and likewise sectors that are maybe far less appealing for us. Now, by way of country, if we look at that bottom chart, there are probably 4 big markets I would draw your attention to in Asia. Korea. Korea is a market where you get operationally and economically very strong businesses. The likes of Samsung clearly lead the way, but it's also a market where we find some really good valuations. It's a market that in particular right now is looking fairly cheap. And as a result, we're happy to have that as our largest active market weight. Indonesia, I mentioned with BCA, the bank, the sheer geographical breadth, which can be a headwind, but also an opportunity for the right businesses. What we like about Indonesia right now, and we've been adding to it in the past 6 months, is it is benefiting from the reopening trade post-COVID. As we all know, Asia is very much behind the curve by way of COVID reopening. Indonesia has been one of the countries that's been open a bit longer, and we're therefore seeing that benefit coming through. So you can see a fairly large active overweight in Indonesia. Taiwan, another one of the big markets. This is very much centered around the semiconductor industry. I mentioned some of the examples. We actually find names that we like, the length and breadth of the semiconductor space, but that's a market that we've actually been trimming some of the exposure to because the semiconductor cycle is starting to slow a little bit. And so as a result, we still like these businesses. We just want to maybe trim and take some of the profits that we've generated in the last couple of years from them, but we continue to feel very comfortable holding a lot of those names. And then China, always a controversial market, probably more so right now than it has been for a while. It's always going to be the largest market for an Asian investor and in an Asian investment universe. And I think this is where our team are so important, because there are clearly a lot of companies in China that you would have more concerns about. But there's also a lot of really good companies in China that mean that to us, it's a market that is too big to ignore. We clearly feel that we can benefit from having our individuals on the ground, all speaking Mandarin, and really buying into a lot on the consumer theme in particular, as well as the renewable energy theme that the Chinese government have put a lot of stimulus into. So it is a market for patient investors. We recognize that investors' comfort around the market varies massively, but that's why, to our mind, you want to be very thorough and always focus on fundamentals and the economics before you're investing. But as you can see, it's about a third of the trust right now. And then the other large market, India. Now, India is a super market long term. I showed you on a couple of those graphs that if we think about certain themes, they're still fairly early on in their long-term growth opportunity. It's often commented on that India is at least a decade, if not 15, 20 years behind China in their growth. Hugely entrepreneurial. But the problem with India, from our perspective for this trust, is you do get some names that look very, very expensive. And so think of the fact that we're underweight India there as a result of the market having done quite well, and there being some really quite eye-watering valuations that we're just not happy to pay when we can look across the region and find some great investment valuations in the likes of Korea in contrast. So we want to be active. We want to be thinking about where we're investing. From a sector standpoint, as I said, there are certain tilts and themes that we will naturally always lean into, but that doesn't mean that we're not always looking around to understand, look, where are the best opportunities? Where can we find long-term growth, but with trust in management? Okay, I'm conscious of time, so let me just move on to the next slide, please, slide 8. By way of performance, I think this slide speaks for itself. The trust is just over 400 million sterling today. Thomas mentioned at the start that the discount has opened up. That's not really a surprise. I always think that the discount premium mechanism for an investment trust, you can almost use it as a confidence indicator. Right now, for very obvious reasons, and a lot of negative headlines, there isn't the confidence in Asia that there maybe has been. If I go back only last year to 2021, this trust was at a slight premium. We were able to offer, or rather issue, some new stock at a premium, and now it's swung all the way down to almost touching a double-digit discount. So think of the discount as very much a sign of the lacking in confidence. What we're trying to do, as I said from the start, is deliver long-term consistent performance. And you can see that on that 3, 5, and since inception basis, on an annualized basis, we've outperformed the index. The one other point I should just stress that I failed to mention at the start is that income component in the trust nowadays. So what we're looking to do is offer 1% yield, 1% of NAV as yield on a quarterly basis. So it amounts to about a 4% yield over each calendar year. So what are the key points I just want you to take away? So if we could move forward to slide 9, please. I really hope that you've understood how fascinating a region that this is. To us, Asia is full of hugely exciting companies. It's backed by demographics and this growing middle class. You have over 60% of the world's population living in Asia, consuming in Asia, starting to earn more money, demanding better choice and convenience, and so on. What we're trying to do is understand the best companies that can offer us that long-term growth. So we're out kicking the tires, speaking to management to understand, where do we trust that companies are trying to do the right thing for all minority investors? China's always going to be at the heart of a lot of that decision making. That's not going to change. The government are clearly trying to stimulate, but of course we have got this overarching cloud of zero COVID, but that doesn't change either, that long-term potential from China. And finally, I think when we package it all together, we've been able to deliver a really pleasing performance profile over the long term, and now over the last couple of years offer a sustainable yield coming through, as I said, of around 4%, which I think again is really compelling, but just allows people to maybe be that bit more patient and have a bit more confidence that you're receiving the yield as well as being exposed to that huge growth opportunity that we see across Asia. So I think I'm at my time. Let me pause there and pass back to Thomas for any questions.
Thanks, Emily. Thanks very much for the presentation. We've had a few questions come in via email, but we do have around 10 minutes or so. So if you're in the audience with a question, please do put it forward. So it's been a year or so where the market's taken a bit of a hit. Are there any particular areas you would highlight as having become particularly attractive, where the team have been adding to existing positions or have picked up new positions that maybe looked too expensive beforehand?
Yeah, great question. I think that the main area that I would highlight is internet companies in China. And let me just explain why. If you cast your minds back, 18, 24 months or so, we started to see a lot of noise and impact from regulators in China on internet and e-commerce companies. So what I mean by that are companies such as Tencent, Alibaba, JD.com. And there was a lot of regulatory pressure by way of trying to ensure that these companies didn't create monopolies and trying to ensure a more fair and level playing field. And the regulations clearly came at a time that we'd just started to get through COVID. If you remember, ironically, China was actually at the time, everyone thought the first market out of COVID. And so they'd gone through COVID and then they wanted to put into play all of these regulatory amendments, or as they viewed it, enhancements. And it really unnerved markets. You saw really sharp, steep sell-offs in a lot of those companies that I mentioned. And part of the problem was it was very heavy-handed, right? It came from pretty much nowhere and it stunned people. Whereas if you took a step back and thought about some of the changes being implemented, they were logical, they were rational, and they were actually trying to do the right thing by consumers. So one example is a company called Meituan, which is a food delivery company. So it's a company like Deliveroo or Just Eat. And basically, they were told that they needed to provide better social security and pay conditions for their drivers. If that had happened in California and the Californian authorities had demanded that Uber or Deliveroo do more for their drivers, everyone would have said, hey, that's great, well done, California. You're trying to look after your workers and you're trying to look after people so they don't get exploited. Because it happened in China, everyone went, oh, goodness, the Chinese are being so heavy-handed. This is what happens in a communist market and so on. Anyway, we've now got through a lot of that. And when we've gone through recent earnings announcements just in the past quarter, pretty much every single internet company beat expectations. They all delivered far higher profits than were anticipated, because what a lot of these regulations have done have made them refocus on what they were doing, right? Focus on your fundamentals, focus on your core strengths, rather than having a finger in a lot of pies. What you had found as well, companies such as Alibaba and Tencent, if they saw a smaller competitor that they were worried would try and grow market share, they went and bought a portion of it. Now, that's not just a Chinese thing. Facebook do exactly the same. But what you've now seen is these companies spin off those investments that they had and refocus on what they're doing. And so Chinese internet has been an area that has been hugely unloved. The valuations have opened up significantly. And now they're all focusing on what they're good at and their core strengths. We actually see some really good opportunity in there. So we've been adding into a lot of those names. So I think that the regulatory story that was really negative has now produced a bit of a bright spot in the Chinese economy. And so that's been an area that we've been adding into.
Great. And we have a question about TSMC. So obviously listed in Taiwan. To what extent does it operate in Taiwan, and do you have concerns about the political situation there as a result?
Yeah, very good question. I think this is exactly the right question to be asking right now. We've clearly seen a big pickup in noise and concern from a geopolitical standpoint with China and Taiwan. So, as I said, TSMC, world's largest semiconductor manufacturer. They are predominantly in Taiwan, but they've been diversifying geographically. And it's not just them. We've seen this with a lot of Asian companies through the COVID cycle. So, for example, TSMC recently announced that they're going to build a new fabrication plant in the US. And our sense is that part of that is they're doing that to ensure that they're not just in Taiwan, that they're tying in with the US. There's clearly concerns. You may well have read about the recent, what's termed the US Chips Act, by way of how the US are trying to restrict use of Chinese chips. Taiwan want to be showing themselves, or rather TSMC at least, want to be showing themselves as tying more with the US angle. So TSMC is broader than just Taiwan, but clearly a large portion of what they do is in Taiwan. To build out a semiconductor fabrication plant takes decades and costs billions of dollars. So it's not going to be something that people can sort of pop up overnight and offer alternatives. I think the other point I would make around this geopolitical side of things is no one really knows. Right, just as no one really knew with the Russia-Ukraine situation where it would unfortunately get to, it's exactly the same with China and Taiwan. The China-Taiwan aggravation and geopolitical situation has been there for decades. There's always been saber rattling. It peaks and it troughs. Right now, it's clearly towards a peak, which was exaggerated somewhat when Nancy Pelosi went over there. What we don't try and do, though, is second guess the outcome. It's incredibly difficult, just as you shouldn't really try and reposition a portfolio based on an election result. It's exactly the same. All we can do is keep focusing on the economic fundamentals of these businesses. But what we have done is recognize that risks are maybe slightly higher surrounding Taiwan right now. So we've added in a slightly higher cost of equity. Think of it almost as a slightly higher hurdle rate. We need these companies to earn a bit more than they were to justify getting into our portfolios. So you never want to change your portfolio on assumptions and noise, but it is something that we're most definitely aware of. But for TSMC, continues to be, to our mind, one of the best technology companies globally, and we continue to hold a large portion of the fund in it.
We have a question about ESG. So in the developed world, in the UK and Europe, perhaps ESG concerns have had to take well, maybe not a backseat, but at least they've been put in context by what's happened in the energy markets. As a similar, you've highlighted electric vehicles as an area of interest for the portfolio. What's the dynamic been in Asia as a whole? Are governments still committed to the same path? Is there a sense of a pause, or how's that working through the market?
Yeah, great question. And as with so many things, it's really hard to give almost one answer, given it is such a broad region, because within the region, remember, you've also got very different markets who come from a very different start point. So India and Indonesia, or rather India, is an energy importer. So when it gets more expensive, it clearly struggles. Indonesia is rich in commodities, so it's been doing incredibly well as commodity prices have gone up. So all these markets have a very different start point. But what I would say is I think there is less of a concern around inflation than there is in the developed world, right? None of these central banks are having to worry about the double-digit inflation that we're seeing across the Western world. Added to which, the central banks, not just across Asia, but across emerging markets, have been ahead of the curve. They did the vast majority of their rate hikes last year and into this year. So they're in a much stronger position. So there may well be a slight pause where everyone tries to work out sort of the whole, is this transitory inflation? What's the impact? Where does it land? But I don't think it changes any of the longer term view. China, again, another really good example, focusing on being net zero in 2060. We've already seen a lot of stimulus in the last year go in towards renewable energy, towards building out their grid, towards making solar far bigger by way of the power input that it provides into the country, and so on. So it's the way I would think about it is, in Asia, it's less extreme than a lot of those headlines and a lot of the pressures that Western governments are having to fight with right now.
Great. We've got one final question here, but if anyone wants to jump in at the last minute, this is your last chance to do so. On the dividend policy, could you just give a bit more detail? So that was introduced a few years ago, and just some question about exactly how it works.
Yeah, of course. So you're right. It was rolled out at the start of 2020, if my memory serves me correctly. And at that point, we changed the name to reflect what we were doing, so becoming Asia Growth and Income. This is still very much a growth-orientated mandate. Ayaz and Rob are not looking at the yields coming out of individual countries and companies. But what we're able to do is the investment trust vehicle allows you to almost create a quarterly dividend. So by selling out some capital to provide a 1% dividend every quarter. So we're still very much looking at growth. We're not looking at the yield of the companies, but we're able to deliver this consistent quarterly income stream that, as I said, is typically aiming to be 1% NAV on a quarterly basis paid out. And that's more a function of recognizing what clients want. We recognize how increasingly important an income stream is. And I think, again, this is one of the great things that the investment trust vehicle allows you to do by way of almost creating a dividend that wouldn't otherwise be there. And it's something that we've definitely seen the benefit of by way of shareholder interaction and the actual assets within the trust.
Lovely. Well, thanks very much, Emily, for your presentation and for answering all those questions. And thanks very much to the audience. We hope you can join us tomorrow afternoon, noon, for Miton UK Microcap. Thanks very much, Emily, and goodbye.
Thanks, everyone. Bye-bye.